there is a lot, Daniel, going on this week. So we got jobs report. We've got I've got a bunch of topics I want to talk about. I think Bitcoin's going to the moon. We're going to talk about that. I'm going to explain why, how the triggers of Bitcoin. Okay, but what I want to do real quickly is explain this jobs report. And look, we're taping this. What is it, Zach? About 9:30, 9:45 on a Friday morning.
It's a little early.
So a little early for us, right? So we usually tape at 11, folks. And so
that's 9:45 Central Time.
Central time, yeah, Central. So here's the thing.
That's the important time, Don.
Actually, it's the best time
Actually
zone.
not.
I think Central is the best time zone. I've lived in every one of them but Mountain. And so, like, I used to really be watching, like, love to watch the football pre-games and stuff back in the early aughts, like the 2000s and stuff. When I got NFL Network, that stuff comes on like 3 in the morning, right?
Yep,
I'm missing all this. Like, I would wake up. Zach and I are having talk. I'm an early riser. Zach likes to work late into the night. And I would feel like I've missed like half of a day because the East Coast is already up and going, right?
Right.
No. Central time zone's got me hooked up. Like it's
kind of in the middle. It's the mean. It's the mean.
It's the mean. Yeah, I like the Central time zone is the 21 exponential moving average of time zones.
There you go.
And it is absolutely glorious. So look, I want to break a few things down.
Speaking of time,
yeah.
Dan, my 6th anniversary was last month, and once again, HR did not send me the gift calendar to pick my prize from.
I actually
your what anniversary? Your 6th?
His anniversary here, not with his
anniversary.
wife.
Oh, I thought he was talking about with his wife.
I did too.
Does Nikki know? You've been married a lot longer than that.
Hey Don, you want that shirt?
Yeah. This is my Florida shirt. I wore this in reverence to Don. I wore this in your honor of being here for 6 years.
Another year without an anniversary gift.
Tim's already got a migraine.
No, they're busy. He's laughing because the show before the show, we were talking about the shirt.
The shirt's his dad's, and his dad is passed. Danny's father passed away a couple of years ago now. Yeah. And not laughing at that. Danny before the show says, Don, I wore this shirt for you. After Don says, Danny, you look like a shower curtain. And
he did not say that.
Yes, he
Tim's
did. He
making
said
stuff
you
up
look
now.
like the human embodiment of a shower curtain. I walked into my bathroom, I pulled back my Danny, and there was that shirt. It looks like a shower curtain. And so Danny then says, I wore it for Don. And I'm like, bullshit. And I don't want to get struck by your lightning. And then he goes, well, it was actually my dad's shirt. And then Zach's like, now don't you feel bad? I'm like, no, I don't feel bad because Danny was lying.
I was sucking Tim in.
And now
get him with the gill.
That's right. Well, listen, you got to remember, I think with loved ones, you got to remember, it's hard to do. You have to remember the good times.
Oh, absolutely.
Very, very hard to do in the moment when you get some horrible news. But you wearing your dad's shirt and then us busting your balls about your dad's shirt is creating more good times with that dad's shirt.
And there's more shirts where that came.
Oh, I can't wait.
I've got a few.
The whole dad collection.
Yeah, well, he had a couple really nice shirts. Now he's got a couple that I won't wear because you think this one's loud.
No,
He's got a couple loud shirts.
I have a feeling there's a couple stock nerds out there that if you launch the dad collection, we could sell them on the website and donate all the money to the USO or Tunnels to Towers.
The Revere Stock Nerds Dad's collection.
The rub, yeah, Danny's meat rub. Rub your meat with Danny's spice rub. Sure. Yeah.
I mean,
we can donate those. We could put an online store on the back of the website. Donate all the profits to something like Tunnels to Towers, or Marine Corps League or something that we choose. And absolutely, I think coffee mugs. At least I think stock nerds would dig it. But look, jobs report real quick, okay, and then I've got a bunch of other stuff. Here's the analysis. Now, I just listened to the jobs report and I did some reading real quickly, and then here's my thoughts. And I haven't seen anyone else's analysis. So listen, if you're listening to this on Monday because it's Labor Day and the markets are closed, you're taking some time to labor over the markets on Labor Day. Maybe someone's written this by the time you get to it, but I haven't seen this yet. The big takeaway here for the markets for me is that we're probably not going to hit our GDP numbers. And so there's a big push out there that there's this great reawakening trade after the big shutdown. You've heard enough of it. And our GDP numbers are going to go to the moon, right? Numbers that we haven't hit because we shut down the economy last year and we're going to rebound. And here's the thing that I want to point out to you. I'm going to give you a couple numbers here. 0.6 and 4.3, and then rhyme it with and GDP. Yeah, you know me. You down with GDP? You know me. So that is a rap song, Danny.
That should be.
No, it is a rap song.
Oh.
Well, you're down with OPP, which is
Yes, yes.
by the way, no joke, did not know what that song meant. So some girl explained it to me in choir one year, and I'm like, oh my gosh, that's what that song means. She goes, you had no idea. Like, oh, I'm pretty ignorant about a lot of stuff.
You
like
have to have girls explain a lot of things to you, don't you?
Oh, I got something.
But never mind. Keep
Hold on.
going. GDP.
Moving
GDP,
on.
please. GDP. I'm sorry.
GDP.
Forgive me, guys. Forgive me. I should not have let Tim go down the rabbit hole.
I'm a quick learner, though. I got 3 kids after she explained it to me.
Wow.
After she showed me how, I'm like, oh, I'm there. I'm trainable. So 0.6 is the rise in wages. Okay. That is a big move month over month. 4.3 is the percentage rise in wages for the year. Look, man, that is huge. That is a big number. And we've talked about it for months on this show, long before the pundency started talking about it, that wage inflation is not transitory. That once you pay somebody more, you can't take it back. You're going to lose your workers. Like it's almost, and I'm not trying to start a conversation, but it's almost like a government benefit. When a program is started, just know that it's going into infinity. You will not call back a government program.
The only way to do that is layoffs, fire them.
Yeah, and here's the way a government, like someone's going to say, well, Tim, they're going to shut down that extra $300 a month. And I say that hasn't been proven just yet. And so, and then Don kind of pointed out the other day when we were having our morning phone call, I said about the $300, and Don goes, "Oh no, they got it going again with the child tax credit. Yeah, they'll just
call it something else.
Call something else." And so, with that inflation in wages, you have legitimate inflation that there's more businesses that can't pass that on. We like to talk about the power of the small business on this show a lot. 70% of our economy is small business. Okay? And we're a consumer-based business, and most of the businesses in America are small to medium-sized businesses. They oftentimes cannot pass on these costs, no matter what they're doing, to their consumer. They're just not big enough to absorb these blows. That's why a couple years ago when Amazon said, we'll pay you $15 an hour, and then everybody else had to go up, right? Like it really gets it's an arms race right now. Walmart and by the way, anyone who's listened to the show for a number of years knows I'm pro work. Like, I'm a populist. Okay, so this isn't workers shouldn't get paid more. That's not where this talk is going. It's the legitimate inflation that's happening within with companies that have to do one of two things: absorb the blow and not raise their prices, or under the guise of inflation and reopening and whatever,
pass it on to the consumer.
They got to pass it on to the consumer. You're not going to see, unless there is a weakening in the economy, and they're forced to do so, you are not going to see prices come down again. Because the thing that's permanent isn't hopefully this pandemic. The thing that's permanent is the new established prices for workers. And we haven't had this in this country decades.
For a long time, yeah.
Decades. And still wages haven't kept up with inflation. And so like inflation's what?
Thank you, Fed.
5.3, 5.5. Inflation up year over year. Like inflation, and still like this 4.3 number, wages have still not kept up with inflation. So Tim, what does this have to do with GDP? Our gross domestic product is worker based. So back when Trump was shutting down the borders, right? The economic argument that was being made with the trouble with this policy, or that policy, was that you're not going to get enough workers into this country to meet our GDP goals. Workers, whether they're robots or humans, need GDP. That's how you generate gross domestic product. In this country, typically with people now being replaced by robots. This jobs report today being so low, right? Like just way off base, right? Maybe it gets revived. Maybe the government job fairies come in and sprinkle a little
Fairy
Biden
dust?
Biden no J Pal Biden dust on the report, Biden dust, right, on the report, and they go, oh, we miscounted, phones weren't working. They blame Ida, even though Ida didn't happen. The jobs reports take it. They blame Delta variant, whatever they need to do. It's no different than when a company says we missed our numbers in January because of the cold weather. It's cold everywhere. But every year you've got a company that comes and says, it was too cold. We couldn't sell it. People didn't want to go outside. And so it's no different. They'll find a reason to revise these numbers, but you can't make if people, I don't think it's people. I'm starting to change my mind, Danny. Like, well, I didn't have my mind set. I've contended in my mind, and maybe in our morning phone calls, who's not working for this extra $300 a month? And there's a lot of argument, well, this point, we would discuss them in the phone call. I now don't think it's been the $300 that's kept people on the sideline. I think it's wage inflation that's kept small to medium-sized businesses from being able to hire. They can't afford. That's a big difference, man. Like that's not your margins on your business are so small that what you have to pay someone doesn't make sense. Now, Danny's giving me the look, like he's got to consider.
Well, I don't know that I agree with that.
Well, you don't have no.
Yeah, no, I think they're paying people to stay home so far. Until you stop cutting the federal subsidies,
Right.
I think you'll see a lot more people come
There's
off the couch and
always-
start working. Hang on.
okay.
You had your turn. Now
All
it's
right.
my turn. Okay. So whatever it is, and that's one reason you're getting wage inflation, because employers cannot find enough workers that are willing to work for that amount. So now they're increasing the wages
Right.
to entice people to work. My daughter.
Pause. Just pause. I know what you're saying, Hunter. Let's go back to our hamburger conversation. Sorry.
Yes. What about it?
Oh, I'm sorry, Zach. What'd you say?
No, I want to hear where Danny was going.
Oh, I'm
You
sorry.
Go
Just give
ahead.
me a second.
We'll come back
'Cause I know-
circle back
I
around.
know
Yeah,
what you're-
I want to know where that's going. Yeah.
There's only Hunter. What was the price of burgers when you went to Five Guys? Do you remember?
Burger, fries, and a Coke at Five Guys for one person, right around $20.
No, I get it.
Yeah.
And here's the thing. You're right about it. It will slow down big chunks of the economy. And I don't want to get too deep into economics, whether you got an inelastic or elastic
Right,
demand curve for the product. Some products they can pass along to the consumer with higher prices. Others, they can't. And that's what Tim is saying, folks, that with inflation, if you're still going to make the same profit margin, you've got to raise prices, and they won't be able to pass it on to the consumer, and therefore their margins go down, and some businesses won't be around or stay in business. Okay, I get that. Now, the other thing is when you talk about GDP, there is one way they hit the GDP number, and that is unadjusted for inflation, because the inflation is included in GDP. So you got to always look at GDP as inflation adjusted GDP. But I get your point.
Non-GAAP accounting numbers that some companies use. That's
non-Fed accounting.
Yeah,
numbers.
that's what Danny just suggested there. And I'm not. This isn't what Danny's advocating for. So there's some companies. So there's general accepted accounting principles.
Yeah.
Most companies report to GAAP. When you see companies adjusting for deals in the pipeline, or when you see companies doing non-GAAP, it's a big red flag. You should have a big red flag.
When you hear non-GAAP,
Yeah.
think marketing.
Yeah.
That's the polish,
Yes.
and that's why the regulators make you transfer that to GAAP accounting and footnotes.
So everyone's
to make
working from the same page.
Everybody's
And what Danny's saying is, well, they can adjust the GDP numbers for inflation, and I'm going to say that they can do that, and that's BS. And
I agree.
Yeah.
I'm not arguing that. I'm saying that the GDP number they report
Right.
already looks better because the inflation's already in
There's
there.
only so, and I'm with Hunter on
And
this.
you're saying we'll miss GDP
We're gonna miss
even
GDP.
with the inflation numbers because businesses will slow down.
Yeah, because the hiring, like you're going to see more solopreneurs, not there's an entrepreneur. You're going to see more solopreneurs working longer hours to keep their stores going their little shops going, their little restaurants going without help because they can't afford the help. And I don't know about, look, $40 to take yourself and your significant other out for 2 burgers, fries, and a Coke.
Oh yeah.
Come on, like I that makes no sense to me. And this is all happening.
Welcome
right.
to the Fed adjusted world.
But is this the start of stagflation? Low job growth.
Oh, it very well could be. Yes.
And
We're gonna
so
watch.
I'm going to put my marker out there right now that this $300 goes away. What is the irony, by the way, stock nerds and market lovers, of the $300 kicker for workers going away on Labor Day?
Is that a real thing?
What stupid person came up with that day? Like the day that we honor the American work ethic, how hard we work in this country, what we do to provide for our families. You know that government program that was real helpful to a bunch of people? We're going to stop it on Labor Day.
Oh,
Holy
it's time to
hell.
get back to work.
What a
Well, it's either that or the politicians had so much foresight. That's their marketing key to be able to keep it going. Oh, you don't want to stop it.
or get your ass back to work.
Yeah, yeah.
One of the two. Zach had the idea.
Yeah, work dad.
So
But here's the takeaway. What do you do with stagflation? In other words, what do our listeners get out of it? What do you do? How should you make adjustments
one
and
sec.
invest with
I'm going to give it to you. Okay?
stagflation?
Don't you steal my show.
Oh, I didn't know it was your show. I thought it was our show.
It's
weird.
Your
Yeah.
money, I
Don't-
thought it was a listener show. Your money.
Don't
radio.
you
More
steal-
money, not his money.
Don't steal. Don't steal
Stupid
your
title.
thunder. Don't steal your thunder.
Stupid title.
Change it.
You own assets. It's an asset-based economy. Like and stock ownership is assets. So
Right.
yeah, you own.
Some stocks will do better than others, though.
Right, but like that's why I'm going to talk about Bitcoin here in a moment. That's why Bitcoin is going to go back to the moon. It's going to go beyond the moon. It's going to go to Jupiter and Mars, maybe even Uranus.
I think that's a song. Jupiter and Mars, not Uranus.
Can we? Can we
Jupiter and Mars. That's it. In the lines of the song.
do we? It's
Yeah,
my
Sinatra.
train.
It's
Do
great.
we have the ability to send Danny when he talks?
Maybe.
Like, thanks. That'd be
Yeah,
awesome.
this is a chance that can happen.
Okay, I'd love that.
But during stagflation in the 70s, stocks and bonds both did poorly. Commodities and precious metals and real estate were the game in town.
I think it's real estate and the Bitcoins of the world.
And commodity related
Yeah.
equities.
Yeah, and so it'll be
stocks that are interest rate sensitive will get hurt.
yeah. Let's talk about that for a second. So this is a good transition. So
By the way, Tim,
Yo.
Hunter still has to eat that watermelon if Bitcoin hits 100,000.
great.
Oh yeah.
I
Hold
would
on,
love it if it did.
watermelon
Remember the bet?
Yeah, I do. I do.
No, hold on. What's the bet? Remind
Oh
us.
yeah, Hunter doesn't like watermelon. So Hunter said if it hits 100,000, he'll eat a whole watermelon.
Watermelon.
Watermelon, yeah.
That is right.
Watermelon.
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 No, water is how some people in Alabama say water. I've had my fair share of arguments and discussions on water versus water.
Water?
So
Water.
Water?
Speaking of
watermelon.
Alabama, speaking of Alabama, honest to God, it's the minor leagues for the NFL. So I'm looking at the Philadelphia Eagles line.
Weren't we just talking about stagflation?
1 second here. Jesus, Danny. Flow with the show. It's their money, not ours. Just flow with it. You got who's the quarterback of the Eagles? Jalen Hurts, former Alabama.
What's his name? Yeah.
You've got this guy who wears overalls, this Landon Dickinson guy, beefy boy, up front, Alabama.
good guy. Good guy.
Yeah, you've got there's a running back I think with the Steelers who's an Alabama.
Najee.
Oh, I knew Hunter would know.
Calvin Ridley, Julio Jones. I could probably name off.
CD
everyone that's
Lamb on the
remotely good.
Cowboys. Like it literally is. The NFL is literally. Mac Jones up in New England.
Yeah, Mac is the starter now.
If you guys want to
CD
go,
Lamb's not from Alabama.
oh, he's not.
CD's from Oklahoma. He played with Jalen at Oklahoma.
Oh,
Jalen
that's where
transferred
I
to
was getting-
Oklahoma
thank
for his
you.
Senior year.
Is the
Yeah.
best picture of a quarterback since like Joe Namath in the 70s, or no, Len Dawson in the Super Bowl 68, I believe it was. smoking a heater in the locker
Smoking the
room.
cigarette.
Yeah, is the best picture
The
now.
sidelines.
Yeah.
Oh yeah.
Sideline.
Well, I think the
Yeah, yeah.
21st century picture of Len Dawson smoking a heater is now this Mac Jones. You can't see his 6-pack of abs, smoking a cigar. He's on a sports card now. Like they sold out. They only made like 10 of them or 100 of them, something.
Huh.
And it's Mac Jones. After they won the championship, smoking a stogie, shirt off, just looking like average 6-pack Joe. It's awesome. It's one of the best sports photos going out there. If you see it, folks, just Google it.
Huh.
Best photo going. Maybe we should get that on the. You know what? I don't think we can use Mac Jones on our title card. Just put Don up there again. So with the stagflation, I think you own assets. And so Wednesday, I was talking on the video with Stockners, and I said Bitcoin to the moon. Granted, Bitcoin was only like $45,000 at that point, and so it's not up like much here, but I just want to share with stock nerds something that I use that I believe is tried and true. Doesn't mean it works 100% of the time, but there's ways to get into things that you like or you see. I think that is just it's fact based, right? Like a lot of people just buy Bitcoin, dollar cost averaging, which is a great way to do it, I think, because it's hard to trade Bitcoin. Now I'm speaking or
Very
crypto.
fast. Yeah.
Yeah, and because you can wake up overnight and like someone in one of the Asian
Down
countries
30
just dumped, and you're waking up to that. So I actually like dollar cost averaging with crypto. Okay, but if you want to trade it and you're like you're trying to pick your spots, right? So this 8, I'm going to draw my arrow here, Zach. Get back on my screen. So the purple line on the charts is a 5. The green dotted line is an 8, and they're both exponential moving. The pink line here is the 21. And look, you can use this with stock. You can use this with anything. Doesn't even matter if it's currencies. When you see the faster moving average coming through the slower,
The shorter term moving through the midterm.
that is the wind at your back. And if you've been watching something and you've done your homework or your research, whatever you call it, that's the signal. You can do all the work in the world. You can tell me. I used to meet investors who would tell me, like, to the gnat's ass detail about their favorite stock. And I'm like, well, have you traded it? No, I'm waiting for my entry. Or no, I'm down 30%. Like, well, how do you know everything about this company, but you're not putting that knowledge
Analysis by paralysis.
Yeah, and so like, how do you take? Because listen, it doesn't have anything to do with your intellect, um, how smart you are, your adaptability to learn. It has everything to do with your timing mechanism. And so I used to meet the smartest people. Like I was on the road like 42, 45 weeks a year, talking with investors, and some of the smart like these people are doing really big things in the world, and yet they couldn't figure this chart out. And I'm like, no, this is easy, man. Let's get some things to help time it. And so like timing is everything, and this timing right here, and Bitcoin's at 30,000. And the level, I guess you could say, was a big level, but well, when do you enter the trade? Just wait for a moving average cross. And this is a daily chart. You can do this all the way down to a minute if you want to. Just remember that when you take a trade, for me, when I take a trade on a time frame, I trade off that time. So if my signal were to break down on this daily chart, that's going to be my turn to exit. If I took a trade on a weekly time frame, I'm going to take it on a weekly time frame. And so whatever you're plotting out this weekend, stock nerds and market lovers, look, everyone has their own triggers. Everyone has their own methodology, and that's what makes investing great, because there's not just one way to do it. But we're all after the same goal, is to be successful. And for me, this 521 cross or this 5-8 cross has just been so beneficial. And figuring out when the tide is changed, and whether it's bullish or bearish. And so then you can come to the scan here. Look, if you want this stock, I'm more than happy to give it to you. This is just a real simple, I kind covered this a couple weeks ago. Summer romance scan, and I'm looking at the 5 coming through the 21, and then I can adjust it. I have it on a weekly time frame. You can do it on a daily time frame. You can do it on a 4-hour time frame, and they'll give you different stocks. But what that allows you to do now is look at a group of stocks that meet your criteria, and you can do some fundamental screening. Or you can load up your fundamental screen, like let's say you did it from Investors Business Daily, or you scan your own from FinViz, or however you do it. Now you can you can get this, you can adjust the scan to get the triggers. That to me is putting everything together. So you can be a fundamental and a technical trader, which is, I believe, the best way to do it. It's how I was trained. It's what Don advocates for. It's what we all advocate for. That really is the essence of the William O'Neill method, is being one of the rare fundamental and technical to advocate for it publicly. Fundamentals and technicals, not just technicals, and it's not day trading. Some people say the word like technicals like it's the F word. It's not. But you need triggers to hone your timing. I think Bitcoin's a great example of this. So where do I think Bitcoin goes? Well, it's got to clear this resistance. This is a zone of resistance. Okay? It's not a straight line. I'm drawing it for you. If you can start chewing through this level where there was a bunch of selling from the prior breakdown, you're probably coming up here to 60,000. So that's another 10,000. And then that's the battle, right? The battle's going to be for this gap. And then the way these things work, if it sniffs 60,000, 62,000, then everyone comes charging back into it, and then before you know it, Hunter's eating water.
I was just about to say.
And so but how do you before you get in it at 100,000, how do you find the triggers that got you in early, right? Because it's the FOMO. Like, Danny, do you follow anything in the NFT space, the non-fungible token space? No. Okay. So there's
Physical precious metals.
Hunter, help me out here. Hunter and I don't talk, not because we're not friendly, but I don't talk to anybody about the show. Hunter, tell me about Bored Apes. You know Bored Apes?
Nope, I don't.
Oh, perfect. Okay. So there's these NFTs, which most people just think of them as GIFs or JPEGs, but the tokens in the blockchain make them have utility. And these things have gone from the hundreds of dollars to the hundreds of thousands of dollars in like this span of time. Right?
Kind of like tulips.
Well, yeah, look,
the 1600s.
The tulips, Beanie Babies, go.
Tulips? What?
Oh yeah,
the tulip craze.
Tulip craze.
In the 1600s?
Yeah.
On tulips? Okay.
So, but what happens eventually, most people get in at the top, and then the market, just like someone bought 65,520. I'm finally going to take that chance with Bitcoin. And I don't know, have you ever been down $30,000 in a trade, Danny? You know, like that, like
only on a multi-billion-dollar trade.
Only most people haven't experienced down 30,000 on a trade unless they lived through the 2008 housing crisis out in California, right, or in Nevada. And so somebody bought 65,220, right? And so the triggers work to the downside as well. Look, buying, holding, dollar cost averaging. I get it. If that's your game, do it. I think dollar cost averaging is great with something like this, with asset base. I don't think inflation is going away here, folks.
No, listen, I can tell you right now, in the last 2 weeks, I have helped facilitate probably 5 to 6 purchases of physical precious metals for people that are very concerned about what's going on.
You know, Walmart raising their prices, Walmart raising their hourly wages just by $1, right? Now Target, it is a fight for workers out there right now. I'll tell you what, and I gotta, just gonna throw this out there as an aside. It's all anecdotal. There's no way to prove it, but society has forgotten how to behave a little bit as they've become recluses in their own homes. They Zoom. And,
I think it's a lot deeper than that.
Yeah, there's some societal issues going on here. Sure. And I got to tell you what, if you're somebody God bless the people that do show up to work to get abused at the Apple, right? Like, there's got to be more to life than that. And I think a lot of people are asking themselves, is there more to life than just getting yelled at while I bring food to people from Applebee's? And I think the answer is yes.
Well, Tim, can I ask a question real quick? Just to
Send it.
kind of, I guess, take the flip side of the argument to some degree. Do you know when the last time the minimum wage was raised in Alabama?
Not
I mean, as far
specifically
as
in Alabama. Go ahead, give it to me.
Federally, 2008.
I mean, it was 725 when I was in college and high school, and I think maybe it went up to like 775 or something, like in the last several years. But you know, that's a lot of the places that are not able to find employees. Not all, but like places like gas stations that are paying people minimum wage, or Taco Bell, or McDonald's, or whatever. You know, part of the issue for me is you've had wage inflation and decreased purchasing power pretty much, you know, not all the time, but if you look back over the last
For
20
as
years
long
at
as
what
you've
your
been alive,
purchasing
Hunter.
power,
For as long as you've
yeah,
been
well,
alive,
yeah,
Right.
30 years.
but when did minimum wage change for those people? And I get that, you know, it's not supposed to be, you know, to live off of, et cetera, et cetera. I've heard all the arguments, but when you're paying somebody $7.25 an hour and they're working 30 hours a week to make 150, 160 bucks after tax in today's world, why would you want to go do that? It sucks, and you can't even live comfortably whatsoever. So I think it's a little bit of tug of war on both sides. Obviously, the companies with higher profit margins, easier access to funding, et cetera, can absorb that a little bit easier. But perhaps it's somewhat small businesses' fault for not accounting for possible increase in what you would have to pay those minimum wage type of workers. And you know, I mean, I guess I'm just trying to depict that, you know, yes, there are some businesses that will be impacted more adversely than others, but perhaps that's in some ways their own fault for not being prepared for what the future might hold, and anticipating that they can keep paying people $7 or $8 an hour for the foreseeable future.
I think what you just said is brilliant, and I don't want to dovetail onto this.
The cleansing of the economy.
Well, that's what's happening.
Pure capitalism.
He's onto this.
Free market.
So there are businesses, Danny was alluding to this earlier, that have been paying well from their inception. Costco and CNC, Costco and Chipotle come to mind. Okay? I'll give you two. They're not struggling right now. You look at their stock charts. Look at they don't seem to me to be struggling one bit. What Hunter was saying, like, well, where's the fourth? I believe Hunter was saying this. Where's the foresight to actually treat your workers well? And maybe that's the way to do business, and you'll be rewarded for that. And I think those two companies exemplify that. Okay. Walmart has a great looking stock chart right now, but I don't know if you put Walmart in the category of, I don't know if you do, of Chipotle and Costco. I'm not saying Walmart's a bad place. I'm just saying typically hasn't been known. Now they're trying to catch up, and they've done major inroads, okay, to catch up. But if you can't compete, you're right, you can't compete for the worker. But I think there's something else going on here. My worldview is shaped by the people I meet. Just this morning. So I roll up every Friday to the Starbucks up Preston, and I get a venti coffee to bring to the shop, and I go through the side door, and I look. I like stock charts. So when you see someone on a computer, like, stock charts catch my eye. I'm not trying to look at other people's devices, but I see this gentleman with stock charts, and I just smile. And then I take 2 steps and I turn around because now I want to know what he's trading. And when I tell you that the gentleman, I want to be real careful here, because the person that was trading is not how it's not depicted. You wouldn't have.
Did you talk to this person?
I did, yeah. I had a
shoulder?
great conversation with him.
All right, yeah.
Like, you would not think that he was trading equities. Not that has to be a stereotype, okay? But had a lot of tattoos and he was big. Like, I thought he might be a boxer or in the MMA. Like, he was really nicest guy.
It's funny. There is a bit of a stereotype.
There is a
who you imagine is
stereotype,
trading. Yeah, a
Yeah.
little bit. Yeah.
And so I'm like, oh, that's not what if I Googled stock trader and hit images on Google, this
Never.
person isn't coming. That's all I'm
Yeah,
saying.
Hunter would come up on that image.
Yeah, that.
Hey,
Thank you for
I
bailing
did.
me out of something I couldn't explain. I do appreciate.
Yeah, you
Yes.
were. Well, I was
Back
just giving you a
yourself
shovel.
into a
I was
I'm
just
giving
letting
you a
go.
high five there, Alex.
So he was on Robin
Very
Hood.
good.
or
That's
was
2
he-
No.
weeks in a row. Society has scared you, Tim.
Next week,
Say how you mean.
stay
Yeah.
tuned for how I burrow myself in a scared like an
Tim
ostrich.
slowly become a prepper. He just doesn't know it.
So I
Tim, real quick, I just got an alert that I think is interestingly relevant to the conversation here. Just from Yahoo Finance on Under Armour.
Yeah.
Under Armour is now hiring more easily with the new $15 minimum wage.
There you go.
Wow.
So
Under
from their
Armour.
Apple
CEO,
announced the
just
same
a
thing a
second
couple
ago.
days ago.
So I say, what you trading, man? I said, I noticed you got some stock charts. I'm trying not to. I literally say, I'm trying not to be a creep, but I'm a trader. What are you trading? He goes, I'm trading pocket options on currency. I'm like, you're a currency trader. He goes, yeah, I'm a currency trader. I'm like, that's cool. Tell me about it. Like, I'm not a currency trader. Okay, like I'm not trading in pips. I go, why do you like currencies? He goes, I'm in the trade 30 seconds and I'm out. And I'm like,
Wow.
wow. And so like
in a couple more weeks, he's going to be out.
No. I no, he's not. And so I don't believe that for 1 second. And so I said, how did you get into this? No one starts out like going, I want to trade in pips, which is how currencies are traded. And he explains it to me. And he goes, yeah, but this is just my gig that I do when I'm sitting here. I drive a truck. And I said, you drive a truck? He goes, yeah, I drive a truck. And he goes, that box truck over there is mine. And I go out and I drive. I can drive long haul. People love it because I go straight line. And he's telling me all about this. And I used to watch this show on Discovery or one of those type of channels where the guys would bid on like Danny would
Bid
put
on a load.
yeah, bid on a load.
Shipping
Wars.
Yeah,
Yeah, that's what it
that
was.
show.
Yeah,
Yeah,
the Sister to Storage Wars.
Right.
And I'm like, are you like I forget the website. He shows me the website. He goes, yeah, sometimes I just bid on the jobs and then I give it to a friend. You know, like he's got his own mini thing going on.
small
He's a
business.
broker. He's a broker for his friends.
Yeah.
Right. Yeah.
Yeah, and so
I like
like
that.
to Hunter's point, I think this was to Hunter's point. I want to make sure this dude has his own life going, free of working at the Piggly Wiggly or the Apple. He pays bills, he's making money, and he's happy.
Oh, entrepreneurialism.
And the other part to that is he's happy.
Well,
Again,
Okay,
it's
he
called
he appeared
entrepreneurialism.
happy.
yes. On a Friday morning at a Starbucks, not a bad place to be. Yeah, life's
Right,
not
like
so
he
bad.
appeared
Yeah.
happy, and he was more than happy to share his story with me.
Yeah.
Like complete stranger going, "Hey, dude, I was creeping over your shoulder. Notice you're trading some stocks.
Right.
What you doing?" Yeah, like, and I'm like, that is why there's this worker. Okay, it's a microcosm. It's one dude, but there's a shortage out there, and whether it's Hunter's friends like taking all the sports cards with robots that they created, is that still true, Hunter? You guys doing that?
That is very true. Yes.
Yeah. Whether it's
Well, the people that will adapt will survive. That's been true for
okay.
eons.
Yeah, well, I don't think we're out of this. What I'm saying is, I think that there's got to be an astronomical lift in wages to get that worker
to cover the inflation.
because when you can sell a box, like for people who don't get the sports card analogy, when you can buy a box of cards at $20 off the Target or Tops.com or wherever you're getting them from, Panini, and then you sell them for 100% more, 1,000% more, which is what's happening.
Yep.
Tulips, man, tulips.
It's like the tulip run of the 1600s.
But it's no. But hold on, Danny. You're saying it's tulips, and I understand, but it all goes back to a point you were making. It's assets.
No, I get it.
It's not safe.
So I want to make one point. Hunter was talking about, the capitalism and some businesses maybe weren't budging enough or doing the right thing but let's look at another cause. So a very big cause of this whole problem has been Congress and the Fed, has been what they've done and the money printing. So the Fed actually has created a lot of this problem, and now they're supposed to be the ones to fix it. Inflation is only by the classical definition of economics. If we're really going to talk about economics, Hunter and Tim, inflation is only hang on. is only monetary, meaning money printing. So you could have a supply and demand short. You could have a supply shortage and have the price gap up, and that's a supply and demand. That's not true inflation. So inflation is because of monetary. They've caused this problem, and now you got to fix it by driving. If you had a stable currency, you wouldn't really need to raise the minimum wage from $7 to $15. You wouldn't have that. A stable currency is actually good. Anyway, so it's a combination of both. Hunter's absolutely right, and so are you, that you got to adapt.
Can we make fun of you for a second,
No.
Hunter? Can we make fun of
Hold on,
Danny
yeah,
for a
wait.
second? Did you hear, Hunter,
Wait.
how Danny backhanded us there with, if you really want to talk about inflation or economics,
I wasn't.
Hunter and Tim.
I just want to make the point that
Yeah,
a
your
lot
Fat
of
Albert voice when you did it.
I just wanted to make the point that a lot of it is actually lays squarely at the Fed's feet. That's all I'm saying.
There's some
I
responsibility.
think that's a
for
fair point.
No,
Yeah,
I don't
it's a
think
fair
it's an
point.
unfair point. I just enjoy it. If you really want to get down and dirty, with
Damn right, I
economics.
wanted to drive that point home.
Look, listeners need to be informed.
Subtlety in Danny's speech I picked up after. You look okay, Tim, for a fat guy. Thanks,
Okay,
Danny.
well let's talk about it. So stagflation during the 70s. You know what caused that?
No.
I don't.
We went off the
I
gold
don't.
standard in 1971, November.
Oh,
Nixon,
Oh,
Nixon,
boy.
hang on a second. Nixon took us off the gold standard,
Yeah.
and all of a sudden, you had massive inflation. Okay, now the Middle East realizes instead of trading gold for oil, we're trading a bunch of wood chips flaked together, painted with some dead guy's president, head on it, and we're giving them wood chips for oil. So they tripled the price, quadrupled the price of oil. If you don't think that going off the gold standard had a significant impact on inflation and stagflation in the 70s,
Yeah.
because you're right, Tim, inflation caused the stagflation of the 70s, no question about it. What was the root cause?
Our Nielsen ratings are just like tanking, dude.
Well, hold on. I want to see where this is going. What did cause it?
Oh, Zach. Now Zach's asking you.
Now
a
you got
question.
me
Go ahead.
going. Yeah.
Go ahead, answer him.
So, I didn't hear the question. What did he say?
Well, no, you saying what caused it?
I told you.
The gold
It went off
standard.
the gold standard.
Went off the
So now
gold
the dollar used to be backed by gold.
Yes.
And so all of a sudden, when you went off the gold standard, everybody that had real assets, like Tim's talking about,
Yeah.
real estate, other
Right.
assets,
Suddenly it's all in the wind. Yeah.
they all were asking more for. They wanted more for paper.
Why did we
It's
go
a-
off the gold standard? Why did we go off?
Well, if you want to get real technical, because France realized that we had a lot of debt. France was actually buying dollars and going to the Fed and saying, "Okay, we want to redeem these for gold."
Right.
And so we
Everybody-
thought there was
there
going
was
to
a
be a
run
run
on
on
our-
gold, and we
There
couldn't
was a run on
afford
our
it.
gold, so
So hang
what
on,
should we
let me
have done?
finish. You asked the question. Let me
everybody's
finish.
taking the U.S.'s gold. What should we have done?
Hang on a second, Don. Where was the gold? We're supposed to be backed by gold, and you're saying we really didn't have enough gold to back the dollar? See, there's the problem.
Everybody,
They were getting
there was
flushed
a run
out.
on the gold supply. Everybody was exchanging dollars for gold, and if we would have run out of our gold supply, what would
Yeah,
have
but
happened?
if we truly had the correct backing and we had gold to back the dollars, it wouldn't have been a problem. The problem is we didn't have enough gold to back the dollars. So yes, you're right. Nixon had to, but that's because we were lying to begin with. That's the whole issue.
Can I just pat myself on the back here? I'm going to say, do I win host of the year?
You might
I
be
do.
hosting this.
He's going to take credit for getting us into a deep debate.
Man.
He wanted to get in this deep economic debate, and then it got deeper.
No,
and deeper.
I didn't have on my bingo card today. Danny argues the gold standard. Like, I just did it.
It's a good segment.
It's a great segment.
Yeah.
Well, no. So if you've got a
It's a
fixed,
good segment.
no,
Yeah,
no,
you're
no,
good.
it is,
You're
it
good.
is.
Go ahead.
But to your point, if you have a fixed amount of dollars and you can't create more, i.e., Bitcoin, then you don't have inflation. Why do you think inflation, Bitcoin is going to the moon? It's because you can't print more, you can't create more. So you're bidding up the dollar. Takes more dollars to buy real assets.
I'm with you 1,000%. I just, when you go with the hang on, Don, just
Hey, listen, we're gonna birdwalk. Danny's
It was
gonna
an
birdwalk.
angry
All
hang
right.
on.
I
Don.
know.
No, I just wanted to. I knew where you were going, you were going to say,
Replay
why
the
did
tape, Dan. It was an anger.
No, I know, but
It
you
was
were saying,
anger.
why did we go off the gold standard? Because we had to. That's true.
Yeah.
But why did we have to?
Listen, going off the gold standard isn't the biggest scam this country has ever
Oh,
suffered.
not at all.
No,
Yeah, I agree.
for
I
sure.
agree. Look,
Oh no, you don't know where I'm going here. Just hang on to your
All right,
agrees.
just hold on to your hat.
Hang on to your hats here.
Yeah.
So America has gotten scammed so many times, okay, by its own people, right?
oh yes,
You-
Sure.
like
and
you-
its own government.
some might say recent events.
Yeah. So, hey.
Some might say recent events. Listen, I will. Charging $1 million for a pallet of water sent to Iraq might be one of them. That happened that happened to a contractor out of San Diego during the last decade. I saw something trending on Twitter, Danny, this week that I hadn't thought about in years. And are you ready to go? My computer, Zach?
Yeah. Hold on just a second.
And it's this: the food pyramid.
The food. Okay, so that's for anybody audio listening. It's like the '90s food pyramid.
Yeah,
You got
yeah,
the 4
yeah.
levels, bread at the
1995,
bottom,
2005.
right. Yeah.
Who came up with this thing? No wonder. So the discussion was America's obese, I guess, was trending on Twitter. Like America's fat, right?
Yeah.
And then people were chiming in with, well, have you seen the food pyramid? And I'm thinking, what lobbyist? Because that's how this country's governed, right? People think it's politicians making decisions, but you can say they ultimately are. But isn't it really the amount of dollars coming in to the
Economy drives
politicians
decision-making.
to get them to listen? I view now what's happening in politics, and I think cynicism is a disease. So I'm looking at this with the cynical eye. When you go to a grocery store and you want to get Danny's spice rub onto the shelf, right? You pay. Oh man, I wish I didn't talk over that. I said Danny's spice rub. Alex. Oh, Alex is
Brisket, a nice steak.
A-
I'm
Ale-
ready.
Alex just wants to rub Danny's spice rub on his meat, and that I think is a beautiful
Wow.
thing. Alex is going to get assist of the year. Like who's the like
And
most
cover it with Don's Gold Cup.
That's right. My God.
It's a good show.
Oh man.
Good show. Anyway,
Good
the
show.
food pyramid, right?
Food pyramid.
Yeah.
So like America is governed by not politicians, by lobbyists. Okay. And so the you
If the food pyramid had not gone off the gold standard, it would be a totally different situation.
In 1971.
Touche. That's a good one, Don.
Hold on.
That was a good one.
Oh, Danny is just Danny.
Deep inside that pyramid were supposed to be bricks of gold, and they just weren't there. It was just
They
food.
weren't there.
This is what gets me about
They're in my basement.
That's
I've
right.
got gold in my food,
Very
Don. What about you?
Everyone grew up with this. I mean, unless you're born after 05.
Right.
Like, look at this thing.
I would bet.
I
if you-
want you to eat 6 to 11 servings of carbohydrates. The things that make you
Yeah,
fat.
that
they
was the
turned to
low
sugar.
fat. That was
Yeah.
well because they were studies coming out there saying that low fat would help lower the risk for heart disease. When actually, that pyramid should be upside down.
Yeah, this
Your breads
pyramid,
and carbs should be.
it's
pretty
like
low.
Roman meal was the lobbyist for Congress, and they said, no, you need more servings of bread. Like Uncle
They
Ben's.
should be at fault for causing the massive spike in diabetes in this country.
The government has been effing us forever with this food
Yeah.
pyramid. Look how fat kids are. You're sending them to school to get 3 loaves of bread a day. How do you eat
This-
11 servings of whole? It's not even whole grains. It's just Tony's Frosted Flakes, a loaf of Roman meal, Uncle Ben.
Look at this.
What the?
saltine crackers.
Yeah.
on there?
Hey, can we get Doritos in here? Well,
Yeah.
that's got some old
Corn chips.
Yeah.
Like this is not
The
right.
loaves of bread. That's funny if you look at that.
We
There's like 4
literally-
different loaves of bread.
We literally killed off a generation with this food
Yeah.
pyramid, and I'm starting it right now. People should be up in arms about this.
I mean, they had plenty to be up in arms about.
This food pyramid's got to be one of them.
They had it on the wall in physical education classrooms. You want to talk about where people don't trust the government?
Like,
this is we thought this was
like
legit.
kids are just trying to do what's right by the Lord, right? They're like, I saw this at school. I'm an obedient student. I'm eating 3 loaves of bread. Can't figure out why they're in husky jeans. That's my life story. Let me tell you something. So
Is this what caused your childhood?
Oh yes.
Oh
Say
yes,
obesity.
he's scarred for life, man. He's scarred for
I
life.
started
And he's
seventh
taking
grade.
it out on the podcast.
Oh my gosh. I started seventh grade at 168 pounds and I ended high
Damn.
school at 168 pounds. Like there's like my mom used to have to take me to the Special Boys store to get my
Special Boys. Tim, you're special. We're gonna take you
Because
to
bro.
Special
like,
Doors store.
1983 wasn't like the year,
good
like
year
it
for
wasn't
you.
all touchy feely like it is now. Instead of, but they did have a little bit of
You didn't get a trophy, did you?
no, I didn't get a trophy. but they instead
They
of
could
calling
still
them,
call you Tubby Tim back then.
yes,
But
yes,
you
yes.
had it.
Yeah.
yes, they call it. Hey, well, funny. We're gonna come back to
You
that.
could have been the fifth telephone.
So my mom would take me to go get Husky jeans, which was just another way to say fat boy jeans. And like when you discover that Husky jeans, are just fat boy jeans, your heart's broken. Your heart. And so then, like parenting is different. We'll have a therapy session right now. So parenting
Wow.
is much different today than it was in 1983, right?
I was gonna say you've got that
Oh,
new
we
food
had that
pyramid below
conversation a
that,
couple
right?
days
Can
ago.
you scroll a hair so we can see that?
What's that?
The new food pyramid's right below that.
I don't want to see it.
Oh, okay.
No, okay.
I
well,
wanted to see
I'll show- oh.
yeah, just.
I don't,
Oh,
what
okay.
is it? It's
That-
literally just.
Oh God, that's even worse.
Oh, they turned it upside down. They
That's
did
not
what
a
Alex
pyramid.
actually suggested.
See, go off the gold standard, and that's what happens to the food pyramid.
Yeah,
It's taken
look how
apart and
messy
turned
that is.
upside down.
So
All right.
my do you remember Garfield the cat?
Yes.
Right. So
I liked Art better.
Where's lasagna?
well, so we watched a Garfield the cat special that would come on CBS. Like Garfield at Halloween or Garfield Does Christmas or whatever the hell the Garfield things are called.
Yeah.
But they referred to Garfield, and I don't think you can do this in Cartoon Land in 2021. They referred to Garfield as Lard Ball.
Lard ball.
Lard Ball.
That's pretty good.
Yeah. That became my nickname.
Oh,
I'm sorry.
No, that's not.
Danny laughed. Danny, come on.
Hey, it's 2021. There's no fat shaming anymore.
That's
you can't
right.
do that.
Hey,
That's
yeah,
wrong.
listen,
I
it's
don't
not
think
about
that you can't go around calling cartoons. We had this discussion about Fat Albert the other week.
Yeah.
You can't go around calling cartoon characters or children lard ball in 2021. You'll get arrested.
Yeah,
Lard
children. I could see maybe just calling children lard ball could be an issue, especially if it's not your own child. If it's your own child, I'd say that's fine.
Oh, I don't
Still
know,
not
man.
That's
It's
great.
abuse,
2021.
man.
It's
2021, man.
They'll arrest the parents too. They don't care.
Or our wrestler names for pro wrestling, for my brother and myself, were Captain Lou Albano and Little Lou.
Little Lou.
Yeah, I'll bring up Lou Albano.
Please do.
Yeah,
Do you have a photo?
Okay, we got to keep this show going, man.
Jesus.
That's
Dan.
true.
We're gonna
Yeah,
get
you
to the
make a good
investments
point.
pretty
Wait a
soon.
second. I'm getting
No.
tangled up in this.
No, we're gonna get Captain Lou Albano. Here we go.
While you're looking for this, by the way, if you Google lard ball, the fourth hit is Garfield.
Oh, interesting.
Actually, yeah. So it's a pretty.
All of these are Captain Lou Albano.
Who is this?
Captain Lou Albano. He was a wrestling manager. Did he wrestle? He might have wrestled.
Did he play Mario or something?
Look at this man. Yeah, literally. Hold on. This is literally a Mario.
He used to
That
be
looks
the
like
manager.
Mario out
He
there.
used-
My
some-
time on the Super
somehow
Mario
in
Brothers Super
85,
Show.
With Cyndi Lauper got
Yeah.
involved with pro wrestling into the storylines, and
This guy looks like a great role model.
I understand that George the Animal Steel was actually a psychiatrist. I don't know if that's true or like an urban legend. You know who George the Animal Steel is, Danny?
No.
Really?
Does that looks like the guy you saw in the Starbucks looking at his?
No, that does not. This is George the
God,
Animal
who's
Steel.
that?
This is.
I love the facial expressions.
I'm
Big
pretty
fan.
sure he was a
Oh.
psychiatrist. Yeah, I'm
He
not.
looks like the guy that was in the Goonies. Is that
I
He
don't
Is
know.
that
looks
not
like
the-
Sloth. Is that what you're saying?
I don't
you
watch
know
it.
the big scary guy
Yeah,
in the
yeah,
Goonies? Yeah. That I mean, to me, it looks like he could have played him. I don't know.
Oh well! Oh my gosh, dude! How do I not have this framed on my wall? It's Lou Albano and George the Animal Steel together.
Yeah, they
Oh,
are.
that seems like an NFT we should make. Now, I'm looking at my notes.
Thank God.
Time to get back on track.
I'm pretty sure
Yeah.
it is time to get to the investments as Hunter prepares Oh, hey, hold on. I'm going to save it for one last thing. I've got a surprise for Danny. But I'm going to just show you this real quick, okay, as Hunter prepares to wow us. Hunter, you have a fan club, and you can't let them
You
down.
have a what?
Fan club.
Fan club.
Fan club. What'd you think I said? Man club?
No, I didn't.
Dan club? You think I said? You think I said?
Man,
You think
man club.
you
Man
think
club
I-
can mean a lot of things.
What do you think I said? I said fan club, but did you think I said Dan club or
I
man
did
club?
that Dan Club. That's
Dan
it.
Club?
I thought
Dan.
You think-
Hunter
you got-
was a fan
Hunter
of
has a
Dan.
Dan club.
I thought Hunter was a fan of Dan.
That was-
Careful, Hunter.
I love it.
So I'm watching the flooding going on, in terrible flooding in northeast and southeast of this country. And my first thought was, I wonder if Carvana, like the auto sellers, are going to rise up because, listen, folks, all these cars, they're destroyed. Like all the flood. I mean, there's thousands and thousands of cars just destroyed. Be very careful buying. Look, there's a used car shortage right now. There's a car shortage. What's going to happen in about 6 to 8 weeks, you're going to see some of these totaled, flooded out cars show up on lots. Be very careful. It happened when Houston had that hurricane a couple
Happened
years.
after Katrina.
It happens every time, and they show up, and they got to crush these things. But if they can get away with selling you a totaled car that's been flooded out, they're going to do it. So buyer beware. That is your PSA of the day. But I thought, let me look at Carvana, the daily chart, and Carvana's up 2% today. That's not the chart of a winner. That's not the chart of That's not the on a daily right now. That's not the chart that says, oh, there was this really bad flood and all these cars got destroyed and we're going to be selling a bunch more Carvanas. I'm like, well, let me look at lithium.
Well, not only that, the chip makers said that. Remember, they were going to try to come online and work free.
Well, these are used cars.
No. But if new cars come back online, it'll ease the pressure on used cars. But
not happening.
But all I'm saying is the chip manufacturers
Right.
have just recently come out and said, we thought we were going to be able to ramp up demand, but it's not going to be nearly as much.
Yeah.
So that also should help that story.
It's not.
And it doesn't.
And so Lithia Autos, which is one of the largest conglomerates of dealers, they might go under different names, but they're owned by LAD. That's an ugly chart. And this is interesting to me because what your brain says should be taking shape isn't. And and right away, the symbolism between what was happening in June with Southwest Airlines and the travel stocks, when everybody was, everyone was telling, I was telling you, dude, you can't get through the airport. It's too crowded. Mm-hmm. And yet the airline stocks were selling off. This it's not new, because new you can go chip sorted. This used car story, I don't know what it means. The economy is about to tank. People are going to stop driving places. I don't know. But the charts are telling me something. We just looked at two. I don't need to go through all of them. The point here is don't force the trade where it isn't. Because what will happen is a bunch of people are going to step into stocks that should go up. This happens in every situation.
Well, also don't think that once a story's out, it makes sense to you that hadn't already been front-running 2 months ago. In other words, a lot of times they create the story based on what they think is going to happen or what's already happened.
In this particular example, though, no one front ran Ida. Right. But look, a bunch of people front-loaded. A bunch of people tried to jump on the train of travel, and they're getting crushed. Right. And so I throw that out as a segue to get into stocks and then to bring Hunter to his man club. Go, Hunter.
Okay, fellas, I lost you for a second there, Tim.
Are you
froze?
Are you going to put? Yeah, we said. I said, go ahead, Hunter. Talk to your man club. Then I saw Danny writing down the words Hunter's
Man Club. That may
and that's going to go out. That email is going to go out to thousands of people. Hunter's Man Club.
Tim, the fifth Teletubby, and Hunter's Man Club.
Are you interested in joining Hunter's Man Club?
There you go.
Subscribe to the newsletter.
Can we just make that is that the headline on the title card for YouTube? We're going to get a bunch of people watching this video that are not going to be in.
We'll talk about that after the show.
They're going to be like, wow, what's this? It's not what you expected. Hunter.
All right.
Hunter. I have a feeling that me mommy, I can't tell if my mommy's laughing or not. And she's a, you know what? We're going to stop the jokes there. Go ahead, Hunter.
Mimami, I would say, is laughing. Yes. She actually sent me an email during this call, I think about something related to inflation or wages, or
Oh,
so. I'll have to read it after. Maybe we can discuss next week. But
I'd love to do that.
just two quick points, kind of before I get into some stocks. The concept of buying stocks or a sector or something because it makes sense and the travel should be coming back or this, that, or the other, that can get you into trouble all the time. And I'm just another example to kind of illustrate this is we've been talking about a chip shortage, right, for the last year. I mean, even more so really this year. There's a chip shortage, the inflation, da 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 da. And so your thought would be, well, semiconductor equipment makers would be doing well. But you look at Lam Research, you look at, I mean, basically most semiconductors that aren't ASML, NVIDIA, or AMD, and they haven't really done anything since February. So just because the news is out there or the stories out there or the headlines are out there, that does not mean it's going to be reflected in price. And I have done this personally many moons ago. I'm just using Lam Research as an example. I had researched these companies and I'm looking at the numbers, the earnings. I'm thinking, these are incredible, companies, great ROE, this, that, and the other. But it wasn't reflected in price until over 2 years later. So you can be early or you can just be flat out wrong. But oftentimes it's better to wait for price to confirm. For example, like the travel stocks, you want to see some big volume come in and push those back over areas of resistance and moving averages before you just start going in and thinking that it's the trade is going to work because the country's coming back. So that's my only point there. Secondly, to your stagflation point and owning assets, Don, who have we been talking about that's been buying up all the real estate recently? It's private equity, right?
Yep.
And so, I mean, that's somewhat of an indication of where the big money is flowing to anyway, is they want to own these, these physical assets, this real estate, just like Dan said back in the 70s, that was the game in town along with commodities. And we've seen money flow from private equity into real estate. You can look at XLRE, look at BlackRock, you got BLK. So I mean, there is certainly some merit to that, is my only point on the stagflation thing. So a couple of individual names here. Tim, will you pull up AFRM for me first? I talked about this one briefly on the video last night. This is a big gap up due to an announcement on a partnership with Amazon. Obviously, you can see the huge move there. But Tim, what I want to look at in particular on this is the first day it traded, which is going to be January 13th.
Here.
Can you see it there? I see it on the very far left. Okay. So really what you want to, and I just was observing this as I was kind of analyzing the stock late last night, and the high on 113 is going to be 103 and the low is going to be $90.01. So I'm not 100% sure, but I believe the after hours high after the announcement on Affirm is pretty close to 103. The actual during market hours high is 101, and the low is 90.28. So for the time being, it has stayed in the range of that initial IPO's trading range. And so what I'm watching for on this name is resolution one way or the other. And so resolution to the upside would be a breakout past 100, past 103, past 101, etc. To the downside, I'm watching that 90 level very closely. So it already undercut the low of the gap day, but it responded very well and respected the low of the IPO day. If this were to break below 90, that would be concerning, especially if it didn't get immediately back above it. So a gap up name on a game-changing / company-changing type of announcement with Amazon. They have earnings coming up, so another reason you might want to be patient. But something to monitor moving forward is, what does the management say about how this partnership with Amazon is going to affect their guidance moving forward? And I'm sure the market analysts, et cetera, will be paying very close attention to that. So AFRM, another name, DOCU, DOCU. This one reported earnings yesterday as well, and initially moved down to about 284, 285. I don't know if you can see the after hours low there, Tim. I don't know it exactly, but I think it's pretty close to that. And pretty much got back above the 50 after hours, and then was able to continue some strength into the day today. So from 285 yesterday after hours to over 310 at one point today, on what looks to be probably at least 5 or 6 times the average daily volume, or around there by the time the day's over. Right now it's at about 8 times average. So a strong day for Docu, strong reversal. Last 2 names here for you, Tim. DAR, Darling Ingredients. This is a borderline under the radar name, not very talked about, but the reason I bring this up is it's been consolidating nicely for about 6 months. It's around the middle kind of area of that base. Is going to be around 70-ish, but it's tried to break out and looks like it had a shakeout, came back, is now trying to kind of digest that move. But what's interesting here is the fundamentals on this name. Check out the sales and the EPS growth on DAR over the last 4 quarters and what's projected for next year. I think it's pretty interesting. Maybe our viewers can get something out of that. And last one, Tim, ENPH. This is a solar company that's lagging today. I've talked about it before. Nothing to necessarily do right here, but I want our listeners to pay attention to this stock if it can get through 180 to 182 area with volume. So that's going to get it above the 50 and above its recent highs, which is going to be 180, 172. This was the first solar name to really come back and show strength for the better part of the last month. It hasn't been the strongest. Sedge and FSLR have acted a little better, but personally, I anticipate that will change. The fundamentals and fund ownership here are better than their peers. So that's all the stocks for today. Before we move on to Alex or whatever is next, I do have one announcement for next week's show. I sent this in an email format.
Oh, hold on.
I'm a nerd.
Stand by.
Are you planning on talking about this?
Yeah, stand by.
Okay. All right, that's all I got.
Real quick, tell me the first time, Hunter, you talked about Darling last year on the show.
Probably last. Let me see. It's going to be last October to November. I know we had a client that bought it in the 40s range, but it's going to be end of October-ish, start of November would have been when we started.
Just want to highlight that.
Probably actually as soon as I came on, if you look at what DAR was doing in October.
So right here, you can see the stock move. And so you want to know, well, how much of a move is that? As a stock that's up 100%. And so, look, the things that we're bringing to you on the show, and I know, look, we do a bunch of nonsense, and a lot of you just go, get me to the stocks, it'll all go up 100%. But that's not how it works. See, you can only absorb so much information. That's the way the brain works. And so what we do is we give you information, and then we let your brain relax. And then we get you back into the tent, and we give you some more information, and then we let your brain relax. That's how the show works. That's why so many people are able to tune in, write down some things, and then go back and take advantage of information like this. Darling might not be a play for today, but it's on your radar. And now I'm going to take you back to the very beginning of the show. Now, what's your trigger? What triggers you into Darling? And Hunter can answer that for Hunter. Don can answer that for Don. Alex can answer that for Alex. You know what my triggers are. You have to be able to answer that at home. That's what this show does. It empowers you to be able to go fish, know when you're right, understand when you're wrong, and then come back to the pond, get a little more timely education, be a part of the family, and then go back out fishing. And so Darling by far is one of the best examples. We're coming up on a year. 100%. So kudos to you,
Tim,
Hunter.
I have thank you. I got just one last thing to kind of add to your moving average crossover screens and whatnot. Something that I've, and Don as well, that we've been really watching closely on sector ETFs, but also you can apply it to individual stocks. Companies or sectors that have been beaten up, something to watch for is when they get the first close above the 8-day exponential and then they get a consecutive close. And you'll see in stocks that are in clear downtrends, like you can pull up MSOS as a decent example here. When they're in clear downtrends, it's typically they don't have many opportunities where they're able to have any kind of continued momentum. So they might get one close above the 8, or they might run up into it and pull down. And you can see MSOS has had a tough time with the 8-day and their overhead moving averages for a long time. So just something to be aware of is monitoring stocks or sectors that close above the 8-day exponential moving average for the first time in a long time. It can just kind of be an early indicator that maybe this sector or the stock is starting to come back to life. Add it to your radar, and then you just observe if there's any follow through, consecutive closes above the 8. Does it run up into other moving averages, get through those moving averages, etc. So just another little tool to add to the toolkit, I guess.
Perfect. Alex, my friend, what do you got, brother?
Hey. Yeah, so I did a little bonus stock video last night.
Whoa! You did a bonus stock video?
He did.
Mm-hmm.
Where did you
It's
do
on YouTube. You guys know where to go. Revere Asset.
No, I don't know where to go. I don't know. Danny just tells me to go to hell. Would tell me where to go to find your bonus stock video.
Yeah, so you'll see it was last night's. It just posted late last night, and also Hunter's video, Daily Market Insight video, was posted yesterday as well. And then Don's doing the 21/21 today.
Tell me where to go to get the video.
I said YouTube, Revere Asset.
Oh, I didn't hear Revere Asset.
Tell me how they can get alerts on their
Make
phones.
sure yeah, and then press that red subscribe button. You'll see it, or press the bell notification so you'll get updated when we post videos every day.
Thank you for doing the lineup of our videos for a week.
Yeah.
I'm sorry, buddy. What do you have?
No problem. So yeah, last night I spoke about the previous stocks that we went over, and one of them was Align. I haven't really touched that. I'm sitting on that. But today I did speak about if I hit 10%, I would trim. And today I did trim on Team, TEAM. I sold 25% of the position. So if let's say you own 100 shares, easy math, sell 25 shares. That's been really strong in a week and a half. It went from 349.50 to it's up in the 380s now. So that was a good one. Sometimes we can catch good stocks, and this was one of them. The other one was the net leaps we had spoken about last week are now up 12%.
Awesome.
So that one's working too. I'm happy to see that. And, just riding those averages and try not to get shaken out and using our stops. The new stock I have for you today is LTHM. If you could pull that one up. So this is a lithium play. The group in the sector is extremely strong right now, and I think that this it's kind of like the pick and shovel with the gold rush, right? So everyone wants to get the electric cars, and everything's about being eco-friendly. Well, how are they going to do that? They need companies like this that produce the technology for lithium-type products, whether it's aerospace, cars, charging stations. This is the company. They have fundamentals. I like this flag here that it's creating. When I say flag, it's a consolidation, and it's holding up near its highs. So look for those averages, especially that pink line, that 21 EMA that Tim's got on his screen. If that catches up to price sideways, this could be potential entry for you. I do own it. Just a full disclosure in my beta test portfolio. We'll see it. Maybe I'll add more if it breaks out above those highs, but those are the 4 that I'm really focused on right now. And that's pretty much it for me. I'm trying to keep it simple, taking it one trade at a time for our viewers.
Love it. Don, here's what we're going to do. Don's got Don stuff. Don is Don stuff.
Yeah, of course.
I've got a very big one last thing. Huge one last thing.
Oh, me?
But Danny has to tell us. I want you, Danny.
Well, we can do that next week.
No. I'm going to produce the show on the air here in a minute, but I want Danny to do the how to get people get a hold of us before I go to Don.
All right.
Yeah, go ahead.
Oh,
tell them.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. They can subscribe up at the top, and they can get our daily market insight video every day the market's open, as well as this podcast delivered right in their inbox. We won't spam them. We won't bother them in any way. It's up to them to reach out to us if they want a complimentary portfolio review or have questions or just want to ask a question about a stock. You can also email any of us at dan@revereasset.com. That's me, the good-looking one. Tim at revereasset.com, Don at Revere Asset, Hunter at Revere Asset, or Alex at Revere Asset. Or you can always call us old school at 855 Real Wealth.
All right, Don. So Don does the 21 over 21. I don't know if you're still doing the Dirty 30, Don, every week. But great for 3-day weekend coming up. Great time to take in Don's end of week video and get that watch list ready for a short trading week next week. What you got, Don?
You mentioned triggers before.
Mhm.
My triggers are undercooked bacon, green vegetables, and lying politicians.
Oh man,
You were absolutely on the edge of your seat then with the politicians.
And stocks that break the 21-day exponential moving average.
There you
That's my
go.
fourth trigger.
Yeah.
Which one? You got one off the
And
top of your mind?
Lulu
Ah.
had been very kind to us. We wrapped profits up on it a couple weeks ago. It broke down, rallied, broke down again. It's a change in character for this stock. If you look at that nice smooth uptrend that it had been after it broke out back in the beginning of June. So changing character for Lulu means we stay away from stocks like this. So it's coming off the 21 over 21 list. Join me for Friday's video and see what's taken its place. We've got a handful of candidates.
Yeah. And the place to find that video, stock nerds, is right here. You go to Daily Market Insights. So we produce 6 pieces of content a week. One of those is Don's 21 over 21 on Fridays. So,
And, well, also, Alex sometimes does bonus
yeah,
videos in addition.
and Alex's videos, Alex is what we call a YouTube exclusive. We don't drop them on the website. We don't email them out. You have to be subscribed to the channel to get alerted. You know, with the alert, hey, Alex got a new video in there. They're timely, so you're going to definitely want to subscribe. Is that all you had, Don?
That'll do it.
That'll do it. Okay, so Daniel,
Timothy.
so we've got 3 things to address here. Okay, I'm going to save the biggest one for last. But I've been thinking. I didn't get to the annuity issue.
That's
Okay,
okay.
It was Jobs Friday, and I think it's just more timely. I wonder if we should do the annuity issue as a separate show, like just you, me, or you, me, and Don, and just have it hanging on the YouTube channel and our website as a separate piece of content. I want you to think about that instead of folding it. Because I think you can instead of like all the economic data and what the markets are doing and all that other stuff that we talk about, it's something that you can just send to people that are being taken advantage of in annuity world. Think about it. I had that thought that it might work better as a separate piece of content. Now, Hunter. So Hunter sends this great email. It had a lot of words. I stopped reading after 10. But it was about...
very detailed.
It was very detailed.
Hunter, you got to keep it real short. Tim can't get past 10.
A lot of words.
I know.
20's max.
And I loved it. No, I read it. I loved it. And here's the thing. Hunter, can you just briefly describe what you emailed? Don't describe what you emailed. Just briefly.
Yes. So I have orchestrated more or less a betting ring, a gambling ring, if you will, strictly to bet on parlays for NFL games for the duration of the NFL season with 4 of my buddies. So 5 total. We each put in $400 at the beginning of the year. So right now, those funds are then split 65% to parlays and 35% to DraftKings lineups. And the same amount of money is bet every week. So basically, right, you've got 400 times 5, 2,000 divided by 18. It's essentially $111 a month. 72 to parlays, around 45 or so, a little bit more to DraftKings. So parlays are the only thing pertinent to the show. And so the way that breaks down is you've got 5 parlays every week. 1 safe parlay, 1 medium, 2 risky, and 1 ultra risky. And me and my 4 friends will rotate who places each bet on a weekly basis. So this week I placed the safe bet, which is a $30 parlay. You're looking to possibly double your money there. Medium bet, it's going to be a $17 parlay. You're looking to make $30 to $50 there. The risky parlays, both of those are $10. you're going to be looking to make anywhere from 100 to 500, maybe even 1,000 off of those. And the ultra risky is $5. And you can make anywhere from 1,000 to 5,000 on those and stay realistic.
Perfect.
So the objective is the same amount of dollars are bet every week. We don't gamble with any winnings, no matter what. And we're giving ourselves essentially 54 chances to hit those risky parlays that can pay out thousands of dollars, that types of thing, on a consistent risk management basis. So more money allocated to the safe bets, smaller amount of money allocated to the risky, but still giving yourself a chance to hit the home runs.
And all these things are applicable to trading and investing with risk control and management. And so I don't know how to do. I love the idea. And so months ago, I was having the talk with Danny, and I thought, Hunter, you and I could do a separate video once a week called The Parlay. But I never told Hunter this because the world is riddled with broken podcasts, broken videos. Like someone will start a video series and then it's just dead, right? Mm-hmm. And we have zero, like the beauty of what we do here from the beginning. Like it was hard. I came on in 2014 and it was me producing 5 pieces of content or 5 pieces of content a week. And then the 6th one being the podcast. It's easier now with all the help. And I don't know if we do this at the back end of the show, like tape a separate segment and just add it into the back end of the show for the podcast, or if we do a separate piece of content that we drop just on YouTube. Like Alex has pieces of content that just drop on YouTube. But if we do it, we have to be consistent if we bring it to people. You know what I mean? Mm-hmm. Like to start something and not do it, or that's not our formula. Our formula for success is consistency. And what were we about to say, Hunter? I'm sorry.
I was just going to say that, we've put the money up, built out a system and a plan to go through the full 18 weeks of the NFL season. So if you wanted to just try it out for the NFL season, I think that's something that could be valid.
Yeah, I think so.
But the thing here is that there is some risk management techniques, and that it's no different than a lot of people go into investing without a plan. A lot of people gamble without a plan. They just want I'm gonna bet $1,000 on the Jags. Well, what I did is my friends, they enjoy making the lineups, doing parlays. So I said, well, what if we systematically did this? We didn't gamble with winnings. We bet a set amount each week. And we rotated who's responsible for each type of bet.
And you position sized based on the probability of the outcome and quote the volatility. So those high risk
very correct. Yeah.
Bet would be like a high beta stock. So you take
like a weekly call option.
Yeah, you'd make a much smaller position size than some blue chip stock. So there's right. portfolio management techniques.
Yeah, there's a lot to be gained here. I got to talk it with Hunter and see if he's interested. I never approached him with the idea, like just because
that's what you get when you produce on air.
Well, no, it's to do it right. It's you have to have. I know Hunter has consistency. It's just that we have to be on the same day, deliver and so. That's why I haven't undertaken it. Okay, Danny, this is the big surprise. Are you ready to see the new website?
Oh,
cool.
I'm a little scared now.
I didn't even know about this.
Wait a second. I got it last night. It's not done. Okay. I'm going to show you one facet of the website. Okay.
Okay.
But Danny hasn't seen it. This is
seen parts of it as we edit.
Yeah, but you haven't seen it on the back. There's a back channel that is being built upon. So you ready?
Wait. All right, I got it.
So this is just one it's not done.
Okay.
By any stretch of the imagination, but where I have you on the page, it'll be the middle of the page, and it really symbolizes what we are here at Revere. And so Revere versus the big firms. And I'm going to tell stockners that you're looking at this. What you see now will continue to shape, evolve. A website is a living and breathing thing. So we need a baseline, and then we just keep shaping and building and adding things. But just watch this. You ready to watch the screen? So here you go. Let's see if I can make it work. So there's the things that make Revere. Open and honest communication, talking directly with strategists. Like that's what separates us from strip mall advisor and that works for stripmalladvisor.com. Like they're not the strategists. They're just people that
They're the asset gatherer.
they're just asset gatherers, right? The content is so key to what we do. Consistent content being built out, and then we're agile. Like the market changes, and it's no different than when we used to make fun of value investors when growth was just rocking from 2011 and on, and like these value funds were just going out of business because, well, I only do deep value, and that
it was deep for a long time.
Deep for a long time, but it got more valuable, more deep and more valuable, and so that's there.
That was the value manager calling to complain.
Yeah.
And then you scroll down a little bit.
Oh, that slides over.
Yeah, we got a little slider. You want to see that again?
That looks really slick.
Yeah, you want to see that?
There it goes.
And then this is what the big firms do. So it's scripted. So and what these points are, stock nerds and market lovers. When you're sitting around the table talking to your parents, your loved ones, your friends, or family, and you're trying to explain to them, well, I'm with Revere, or you're trying to explain to them how you invest, which is probably akin to something that we're doing here. It's hard to articulate the value of what you're doing because, well, I just buy and hold guy is very, very pronounced, and you're not going to get through to them. And you're not trying to win anybody over. But what these people are when they go with the big firms that JP Morgan Chase, it's a scripted sales pitch. You have a salesperson. There's the asset gatherer point right here. Just what Danny was saying. You have an asset gatherer. The words trust us, and what they really mean is we know better than you. And what that really means is you don't get how the world works. You don't get how this works. So we educate you. We bring you into the tent.
We at Revere.
Yeah, we at Revere. We bring you into the tent and we talk to you as if you're just with us because you are with us because you're smart. We know you're smart.
And we talk about what we're doing on the newsletters and this podcast.
Right. And so that whole we know better than you, that air of superiority just permeates stripmalladvisor.com. And then that set it and forget it strategy that they do. And then what happens is when it's not working and you're unhappy, they have plausible deniability. Well, that manager is going to get fired. And so what the salesperson does or the asset gatherer does is tries to emotionally align themselves with you and say, I'm pissed off too. We'll fire them and we'll get a new one through a different mutual fund. Just break the cycle. But this is by far one of probably the keystone of the new website. And you'll see up here. These will get filled out here. Lickety split. Tomorrow's insights. That's what the video's on. We're not covering what happened. We talk about future. We talk in future text triggers to get you into things because if it's a market and anything can happen in tomorrow's insights. And so I'll keep unveiling bits and pieces as we roll along till we just unveil it all together. But you'd want to see that.
Cool.
We'll talk to you next week on Your Money.